We are only 2 days in to a holiday shortened week, and there's already been a lot of action, particularly on Monday. Monday was a crazy day where just about everything rallied, even crypto-related stocks, and Bitcoin managed to rally on Monday, although the crypto-related stocks gave most, if not all of it, back today, with some of the biggest names in the industry hitting new lows on the year today. But the biggest winner on Monday were the gold mining stocks. Huge day. I think the GDX and GDXJ were each up about 5% on the day, a little bit more. A mixed bag today. Some stocks continued to rally, a little bit of a pullback. The price of gold now is back above 4,100. Let me give a quick check where it is here on Tuesday night. 41.40, up another $11 from today. And silver is back at 51.5. So both silver holding nicely above 50, gold solidly above 4,000. You know, the GDX and GDXJ are still 9% and 12% off their highs as far as how much they'd have to rally. But some of the stocks, including some of the ones that we own in our dividend payer and value strategy, we own a few mining stocks in those strategies. It's not my gold strategy or my gold fund, but we still have a few miners. And two of the ones that we own are Barrick Gold and IM Gold. And both of those stocks today hit new highs for the move. So some of the names have already started to hit new highs. And I think this is a leading indicator. And in fact, I think that the gold and silver stocks are going to hit new highs before gold makes a new high. Maybe not silver. Silver could take out the high, which was 54.40-ish, before gold. In fact, I think silver will make a new high before gold, but gold will make a new high probably before the end of the year. And what is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs is going to be the Fed. Remember, we have one more FOMC meeting. I believe it's scheduled for December 10th. And that is actually the day that I'm going to be flying back to the U.S. from Amsterdam. I will be speaking at a gold conference there. If I have any Dutch fans who are going to be in Amsterdam, they could come see me. I am going to Amsterdam directly from Dubai, where I'm going to be having that debate conversation with CZ on tokenized gold versus Bitcoin. So I'm going to be in flight when that FOMC decision comes out. I mean, I'll try, I forget if I'm going to have any live television, on the plane. But I'll be able to talk about it probably the following day, but I'm not going to really be seeing it live. But that's the date I think it is, the 10th. And I know that because I got an email from Fox Business, Liz Clayman, who always likes to invite me on when we have the FOMC meetings. I got the invite, but had to turn it down because of, my travel plans. But I believe the Fed is going to cut rates again. And if you recall, the last FOMC meeting, that's when Powell threw a monkey wrench into the whole, rate cut, narrative by kind of saying he didn't really know what he was going to do, that it was kind of like a coin toss, that, they could cut rates, they could leave them the same. They really didn't know. It kind of depended on the data. And that really pulled the rug out from under these expectations. And the markets went down. They were nervous about it. And if you recall what I said on my podcast, I said I didn't believe the Fed. I didn't believe that they weren't intending to cut rates. I think they absolutely knew that they were going to cut rates again. They just didn't want to come out and admit that. They wanted to pretend to the markets that it's not a sure thing, that it's not a lock, and that, they're weighing the evidence, knowing that it really didn't matter because the economy is much weaker than they are letting on. And of course, there's a lot of behind the scenes pressure from the Trump administration. So they're getting a cut. But what helped revive the markets over the last couple of days was FOMC members coming out, including again today, and expressing that they want to cut rates, that the Fed is now, or they are more worried about the labor market and softening in the labor market than inflation. In fact, the party line that they're all towing at the Fed seems to be that inflation is behaving, that inflation is coming down. And so what the Fed is really concerned about is potential weakness in the labor markets. And that's, of course, exactly what the stock market and other markets want to hear. And I think that is what is driving the rally. And I do expect now, I think the odds of a December rate cut, which had fallen back down from like 90% to 50%, are now back up above 80%. So that's what's going on with the markets. And I think that is also why you're going to see this surge in gold. And I think the dollar is now just rolling over. I talked also on my last podcast, or I don't know if I was on this podcast or the Schiff Gold Market Wrap, about what was going on in Japan. And that was also hurting our markets until the Fed came in with a rescue. And, these statements may very well have been damage control, as FOMC members were worried about the markets and they thought they needed to, throw it a lifeline. But I mentioned yields in Japan had moved above 1.8 on the 10-year. They backed down. Now we're back above 1.8. 1.81 is what I'm looking at now. This is a new 20-year or so high as we continue to march towards, and then I believe through, 2% yields. Now, 2% yield on a 10-year may not sound like a lot, but in the land of the rising sun, it is when you're used to, or they were used to, yields of 25 to 50 basis points. So this is a huge move, and it's not going to stop at a round number. But I think that round number is going to be a significant event, because the cost in Japan to the government of financing this massive debt is going to be significant. And I mentioned, yes, it was on the Schiff Gold Market Wrap, that what I think may happen in Japan is that to finance the massive stimulus plan that was just announced, that they will sell treasuries to pay for it rather than increasing the issuance of JGBs, because the Bank of Japan, or the government, indicated that there would be no increase in the issuance despite this huge stimulus package that needs to be paid for. If they're smart, or I know they're smart, but if they do the right thing, they will sell U.S. treasuries, which is going to be very problematic. But of course, that's another reason why the Fed is going to have to go back to quantitative easing and easy policy to try to offset the torpedo that the Japanese will be launching our way should they decide to start selling U.S. treasuries, because they're now the number one holder. They're more than Japan. China rather. China was, I think, number one, but they've stopped buying. And so we rely a lot on Japan, but that could change. So the markets are reacting to the economic data. The consumer sentiment numbers came out today. We're getting more economic data, and it sank to a 7-month low. In fact, in October, the reading was 94.6, and the reading collapsed in November all the way down to 88.7. So that's a big monthly drop in consumer sentiment. And I think a lot of this is being driven by inflation, despite the fact that the president seems to believe that inflation is under control or non-existent, everybody is talking about the affordability crisis, whether it's housing, whether it's healthcare. It's all about things are not affordable anymore. People have a hard time making ends meet. And of course they have a hard time making ends meet because of all the inflation that the government has created. I think it's very rich that both the Democrats and the Republicans agree that we have this affordability crisis. In fact, it was that issue that propelled Mandami into the mayor's office in New York City, because he was playing into the fact that everything was too expensive and that the government was going to help lower the cost of living. But of course, it's the government that raised the cost of living in the first place. And it's both Republicans and the Democrats that are directly responsible for the affordability crisis. Because the reason that things are so expensive is because both political parties have decided to fund government spending through inflation. There is no appetite at all for reducing government spending and balancing the budget. Both parties want to continue to spend money that the government does not collect in taxes. So where does that money come from, right? It has to come from somewhere. And it's coming from the Fed, right? It's new creation. It's money creation. It's inflation. So instead of raising our taxes, in fact, they talk about cutting our taxes. But instead of raising taxes to pay for all this government, they rely on deficit spending and the Fed. And as a direct consequence of that, prices go up. That is how Americans are paying for government. They're paying for government by paying higher prices as opposed to higher taxes. So the increase in the cost of living is the direct consequence of the expansion of government. We don't get all this government for free. We're paying for it. We're just paying for it when we go to the supermarket, right? When you go to any store and all the goods are more expensive or all the services are more expensive, that is why. You know, I was looking at just this article today that was up on Zero Hedge about $4 French fries, and it was going over how much food prices had gone up at McDonald's just in the last 4 years. And it was practically double, you know, for hamburger, French fries, whatever was on the menu. But these are incredible price increases in just a short period of time. And it's not going to stop, right? The price increases are going to continue, and the government is allowed to somehow say there's this affordability crisis. I mean, the biggest irony is with Obamacare, you know, where they're saying, no, we have a healthcare affordability crisis, so we need to increase the subsidies for the Affordable Care Act. But the Affordable Care Act was supposed to make healthcare affordable. I mean, it was passed a long time ago. Yet healthcare is more expensive than ever, even though we have the Affordable Care Act. And it's not that healthcare is getting more expensive despite the Affordable Care Act. The Affordable Care Act is actually helping to make healthcare even more expensive than it would have been if we didn't have the Affordable Care Act.